Welcome back. Now, weaker business activity and a further decline in employment have weighed on the manufacturing sector. During February, the Absa PMI edged lower by 1.3 points to 47.4, even though most of the subcomponents remained broadly unchanged from January. Miyelani Maluleke, senior economist at Absa, joins us now to discuss what this loss of momentum in the overall PMI with the added geopolitical risk means for the manufacturing sector moving forward. Miyelani, it's really interesting. It is because, like I've just said there as well, those counters look much of the same. So what has changed? What the devil's always in the detail. What has changed here?
Yeah, it's a really good point because I think when you look across most of the sub-indices, not much of a change really from Jan, but we're seeing that headline come down, and it's really coming from two specific sub-indices. One that speaks to business activity, which broadly tracks output, and the other one related to that, tracking employment. And I think what's happening here, I mean, we just had the budget last week. Finance minister was telling us that the National Treasury believes the economy is going to see growth of around 1.6% this year, from an estimated 1.4%. And it's always things like the PMI that you look to get a sense of where the economic activity is improving. And I think, given that sort of context, today's print is certainly a little bit disappointing, but I think also just an important reminder here, Ray, that for the manufacturing sector specifically, there are still some underlying issues here that still need to be addressed. So some of the feedback that we're getting, Ray, from manufacturers in this latest survey is manufacturers saying, look, they're still seeing supplier-related disruptions. There's more manufacturers talking about water issues and the kind of impact that is having on their businesses. There's other manufacturers talking about, electricity infrastructure at the local level, and some of the disruptions that is adding to their businesses. So yes, I think we've come a long way as South Africa, without a doubt, in terms of addressing a range of binding constraints to growth. But I think the PMI survey reminds us here that there's still quite a bit of work that needs to be done to get this economy and to get the manufacturing sector specifically to be on a sustainable recovery trajectory.
Yeah. Miyelani, you actually drive home a very good point. And the point being that January was fantastic. February, now we've got a bit of a problem. What's going on here? What worries me is the rest of the year. If we're going to hit that 1.6%, this cannot continue.
Yeah. It becomes really difficult, to speak of a 1.6% when, one of the key parts of the economy is struggling in this sort of way. I mean, we are, of course, hopeful that we see growth of 1.6% or perhaps even stronger. But I think that it is clear that domestically, South Africa still needs, to address a lot of structural issues. And of course, it becomes even more important in this external environment where it's clear that uncertainty is going to remain very high. We don't know what sort of, geopolitical shocks that we may see. I mean, these developments over the weekend and, as ongoing right now, it's pretty clear are going to have an adverse impact on the domestic economy. I mean, if you just think about what has happened to oil prices right now, we've seen the rand weaken a little bit. It could add cost pressure, not just to the manufacturing sector, but it could add cost pressure to the economy more broadly. So in this environment where there's so much external uncertainty, I think it becomes even more important for South Africa to address a lot of these issues that businesses are saying are affecting their activities and certainly affecting their investment decisions going forward.
Yeah. Do we need to start factoring in some of these conditions? We have been celebrating a very strong rand, or some of us have been, of course, depends whether you're exporting or you're importing. We've been celebrating a very big high gold price as well. Do we not need to be careful? Because that rand may not stand its ground. Like you can see, it was 15.91, I think, yesterday. Now we're on 16.10 or thereabout. I mean, we need to be careful.
100% correct. And I think, of course, the other sort of key thing to remember is that the rand exchange rate is a bit of a double-edged sword for manufacturers, right? A stronger rand helps from a cost perspective. If you're having to import, inputs, machinery into the country, stronger rand helps you. The stuff becomes cheaper. But if you're an exporting manufacturer, a stronger rand makes you less competitive. So there's always that consideration. But I think even more important, Ray, is just the volatility of the exchange rate. That makes it harder for businesses to plan going forward. So I think you make a really good point. So sure, while we do sort of, as consumers, I suppose, celebrate the fact that the rand has been stronger, it's helping bring down inflation, the impacts on some other parts of the economy are not always that straightforward.
Yeah, well, let's chat in a month's time. Miyelani, thank you so much. Good to chat to you again on Business Lunch. Thank you so much. That was Miyelani Maluleke, Senior Economist at Absa.